Welcome to Budgeting for Success, an introduction to financial planning. Um, my name is Pedro Garcia, and I am the trainees manager at Partnerships for Parks. Uh, Welcome to our first session of the year. I will be hosting the sessions for the remaining of the year. So welcome, whether you're new or have already been working with a local park. We feel this training will be very helpful. Um, so you will see me more frequently, and for today we'll also be joined by our special guests from TD Bank, Steve and Marcus, and I'll introduce them a little more as we go on. So what I'll do is I'll first go over the agenda for tonight, right? So we're on from 6 to 7, so we're going to try to go as efficiently as possible through the slides and through the presentation, right? So I'll go over a little bit about Partnerships for Parks and what we do and how we support your groups. Our guests for most of the meeting will be Steve and Marcus from TD Bank. And some of the things that they will cover is that they will cover the basics of financial terminology and lingo, how to build and use different types of budgets, the basics of tracking your organization's cash flow. And what we'll do is we'll have a Q&A section after they finish presenting, but they will start that Q&A section with the questions that some of you have submitted during your registration. So we'll start with those first. And then once we get through a lot of those, most of those pretty much, we'll leave room for you guys to ask additional questions. And you can type your questions in the chat area once we get to that point. And then we'll make sure to get those questions out to Steve and Marcus and the rest of us. And then we'll finish with wrapping up with resources that you guys can have to take away. And a follow-up email as well will go out to you guys with a survey for feedback and also more sources. Financial planning for small organizations is a training that has been frequently requested from Partnerships for Parks and from our program and the Academy workshops. Navigating financial terminology, tracking fiscal activity can be a daunting task for organizations of any size. We're lucky tonight to dedicate time to this topic with the help of TD Bank. But before I pass it on to them, I wanted to make sure that I talk a little bit about who I represent, right? So I work for Partnerships for Parks, and Partnerships for Parks comes together from City Parks Foundation, a nonprofit that came together with our city agency, New York City Parks, to form Partnerships for Parks. And think of them as the parent organizations of Partnerships for Parks, City Park Foundation and New York City Parks. So what Partnerships for Parks does is supports the growing network of neighborhood volunteers with tools and resources, right? We help advocate for our local parks and green spaces. So we try to equip people with skills and tools they need to transform parks and green spaces into dynamic community assets. Think of these 5 pillars as the way in which we support community park groups, right? So beautification, we support year-round opportunities like painting benches or many other projects that beautify your local park. We provide trainings like tonight. It's one of those trainings, right? That we can provide. And today we'll guide you on ways to better understand financial planning. And we'll have more trainings coming up for the year. The other way which we support is we have staff support. So we have an outreach team, outreach coordinators who can help your group connect with resources you might need to grow or help you navigate the New York City park system. My colleague Laura, who's in this meeting with me today, she manages the community coaching program, which provides one-on-one support for groups. And then lastly, we have a small grants program, which offers funding opportunities for projects such as events, websites, and other marketing materials. And if you have applied for these grants, I know some of you have, this webinar might be helpful and relevant. But without further ado, let's please welcome Steve Garabell, who is the Vice President of Business Development Efforts for the LGBTQ community at TD Bank with over 20 years of experience. The responsibility is not only for bringing the bank services to enterprise owned by members of the community, but also working to ensure TD's top employer of LGBTQ professionals in the industry. He will be joined by Marcus Gonzalez, who is the Vice President of Community Business Development with over 17 years of experience. And he's focused on community advocacy and positively impacting diverse business communities. He has become a trusted advisor with local business leaders and community organizations, partnering on financial empowerment. So without further ado, let's welcome Stephen and Marcus.
Thank you, Pedro, and thank you, Partnership for Parks, for allowing TD Bank to be a partner and join in this budget and basics class. Again, Marcus Gonzalez, Community Business Development Officer for TD Bank, and glad to be here. And together, myself and Stephen Garabell will be leading the presentation tonight. Hopefully, at the end of the presentation, Pedro, we can skip forward to the next slide. So the objectives of today's presentation are, at the end of the presentation, we would be able to identify and define your monthly budget items, both fixed and variable, to be able to create a budget, design a budget specifically to help manage your spending and work to eliminate debt. And then lastly, to create a budget action plan to learn how to make some smart spending decisions. If you can skip forward to the next one. So just to go over a little quickly, there's the cycle that we see a lot of businesses go in. You get a payment, you make payments on your bills, or you pay your employees, and then you're waiting for the next payment to come in before you even know how the money is going to be spent. So ideally, what we're going to have you guys do at the end of this is be able to budget smartly and know where your money is going to be spent before it even comes out, so that you know what bills you're going to pay, what employees you're going to pay, and how that's going to work. So many people get caught in the cycle of depending on the next payment for survival, and without that next payment, they are unable to pay their expenses. The financial decisions you make starting today will determine the direction of your financial future, break the cycle, and get on the path to reaching your financial goals. We can skip to the next one.
Hey, good afternoon. Good evening, everyone. This is Steve. And, like Marcus said, in this, we're going to really go through, if you looked at that cash flow before, it's a circle. And the one thing, even though you might be community organizations and not-for-profits, think of your business as a business. You have to stay positive with your money so that you can go and do more and impact more. So that whole flow of cash is really important. It's not like you're a restaurant or a place that's getting money every day from their customers. You might get a grant, or you might do some fundraising, and it happens sporadically. It's not going to be something that's going in daily. So having a budget and really knowing how you're spending that money is super important. Knowing where your money is going before it happens. Let's say you're going to go and build a new garden. You want to know what the cost of that's going to be in general. How much do you need for plants? How much do you need for hardware? Do you need to get more soil? Are there things that are going into it? And you have to know going in if you have enough to do it. So you might have to have a budget for the organization, but then if you're going in to do a project or an event, have a specific budget for that event, taking to make sure that everything adds up and the things you're doing are profitable for you. Looking at short-term needs and planning for long-term needs. You might want to do a capital project and say, we know we have this $10,000 project that we want to do. It's going to take us 18 months to raise that money, but having a budget for the project and then having a timeline of how you're going to raise the money and how you're going to bring it in. That long-term need is sometimes the most challenging to raise for, because you have to be really, really good at keeping the money aside and knowing what it's coming in for. Creating an emergency fund. I think what we learned, small businesses, non-for-profits, during the pandemic, we learned that, having a capitalized organization is very important. So while we don't want you breaking, just having no reserves, and we don't want you having a ton of reserves, there's a sweet spot of reserves for you. Think about, looking at what it costs for you to run your operation for a year, can you keep that in reserve? So if, let's say, something does happen like the pandemic, you then have a year's worth of reserves to go in and handle what is getting thrown your way. And, those are kind of the most important things. You're, by handling reserves, you're investing in your future, and those reserves grow money. So whether it's even a minimal interest amount, it's still something that's growing money, that's going to help you in the end. Pedro, you can flip to the next.
So before we jump into getting the participants to kind of take a couple of minutes and create a little bit of a budget for themselves, as Steve mentioned, one of the hugely important things is having a reserve. And we've seen a lot of nonprofit organizations, what they do with their reserves, and sometimes they're able to actually invest their reserves into, highly high return vehicles, and that can be hugely important for the organization to have their money work for them without even necessarily, doing something just other than having the money sit there. So with that being said, I'm going to give you guys about 5 minutes. Not sure if you can see this fully properly, but this is just a guide for you to get for yourself, just 5 minutes, just to create a little budget for 1 month, right? Not the whole months that are outlined there, but just use February as a gauge and say, if you know what money you're going to get in February, how do you plan on spending it? And just to see where you're going to end up, or where you think you're going to end up at the end of the month. So it is 6:19 now. We'll say 6:25. We'll just double check back in with you guys to see where we are. If you guys want to add some stuff into the comments as well as you're making your budget, that can be good. We can address some of those comments and questions that you may arise when creating your budget there as well.
Yeah, and when you think about revenue and sales for your organization, it can be in different pieces. So is it donations? Is it a grant? Is it those are pretty much your two typical ones, or is it something, some organizations sell tickets to events? Is it a fundraising event like that? So you normally take a look, and I say a lot of the orgs that we work with take a look at those three buckets: donations, grants, and then events, as a way of generating revenue. That really helps a lot. And you can take a look at what your biggest month would be too, if that will help you, kind of what your biggest output month for expenses is going to be, because you need to going into that you have to have a lot of reserves put aside.
So I'm probably gonna mispronounce this one, but Mr. Campbell said, do you include budget for specific projects such as I Love My Park events held during the year in your overall budget? So I would say yes, because a lot of nonprofit organizations, you are planning ahead for the entire year. So you're gonna make your 2022 budget before 2021 is even over, so that you know where you need to be and what you need to get in order to do so. So if you have a plan to have that I Love My Park event, you're going to want to know how much it's going to cost, how much you're going to need, what type of planning time you're going to need to have this event rolled out. And a lot of times when you're creating that budget, you may not necessarily need dollars, right? We've seen nonprofit organizations where they need to host an event, and an event space is donated to them. So that kind of eliminates some of the cost that they may have. So in your cases, if you need to have an event and it's going to be in your garden or in your park, instead of having a budget for employee payments, if you get some volunteer hours, then that can kind of eliminate some of that cost for your overhead expenses as well.
So expense, which one are we on, Marcus?
Yeah, right there.
I see. So expenses. So it's hard. You're going to have two things that you're really looking at: your expenses and your income. And you know you can't have more expenses than your income because you're not going to be able to pay them. And that's always one of the hardest parts about a smaller organization starting out, is that you have to be able to raise money and also balance those expenses. So that is it's something that you really need to just be cognizant of when you're putting your budget together and saying, what are my expenses and how can I eliminate the unnecessary ones? We all want, lots of great things, but you can shop around and identify different things. So if you're planting flowers, can you find a supplier that's going to maybe donate some to you or give you a better deal on them so you can keep the cost down of those? Are there, do you have the ability to adjust spending as needed throughout? If you are waiting on, let's say, a large donation from someone and then the donation doesn't come through, will you have the ability to find that money somewhere else or redirect those, not take on those expenses? And then, really seeking out new sources of income. This is always the hardest piece too, especially when the pandemic hit and, foundations got less money, because foundation money always goes directly off of profits for a company. So, some companies had hard times during the pandemic and the giving went down or the giving changed. A lot of organizations changed their focus. So that's something to keep in mind too. How can you stay current with the income sources coming in? So I always say it's great to have different versions of income coming in. So one, whether it's through events or selling tickets, two, through donations and finding ways to really partner with individuals to get charitable donations from them. And then, you have your grants. There could be city grants, state grants, federal grants, private company grants. So you have those three vehicles to really take a look at and say, how can I drive this? Some nonprofit organizations have membership dollars where, they charge let's say a $50 annual member fee for people in their group. And that money adds up and gives them kind of a cushion on how to do things. If they have 100 people that are members and each pays $50 a year, it gives them kind of a starting budget to go off
of. And to Steve's point, having multiple sources of income, I'm going to go on a limb here and say that most of the participants on this call are entrepreneurs, right? And as an entrepreneur, the importance of having multiple streams of income. And with a business, it's especially a nonprofit business, it's very similar. So putting my banker hat on right now, if we're looking at a business and they only have one source of income, while it's good if that source of income is really strong and it's reoccurring, if that one source of income goes away, then the business is kind of in a really bad position, a really bad situation. So if one source of income is not a majority of your income, then that is a lot more beneficial than if you have one major provider, one major donor, one major supporter that's given to your organization. So seek out new sources of income is really important. And just to go back a little bit to Miss Hirsch's question, what did you mean by volunteer in budgeting? So usually if you are budgeting for an event, what we would recommend is you look at all of the facets of the event. So how much employee employee power you're going to need to support that event, right? And if you're going to be paying employees to service the event, if you're going to be having goods and food vendors and different things that are going to go into creating the event, oftentimes if you get some people to volunteer for that event, then the dollars that you would have spent towards your employees or the people that are going to be handling the event for you, then you can kind of go away from those dollars being spent for the employees if you get some volunteer time in. And there are lots of organizations that can help with some of their volunteer hours as well.
I have a good example of that for you. So annually, one of a really small nonprofit that we have, they're tiny. They do a kind of a fundraiser every year. We volunteer and we get them 20 employees, and we are their cater waiters. And it saves them $5,000 in hiring staff. So that to them is really beneficial. And some other little things. Let's say you have a lot that you need to clear, and it would cost you $1,000 for labor. Partnering with an organization, we've gone and cleared lots before as just part of a volunteer event. So that cost of volunteering can turn into really big dollars for you. From a manpower standpoint.
Yeah, that was actually one of my first times creating a compost heap, helping clear a lot for a school in Brooklyn, and it was a phenomenal time. But that's what I mean by getting some volunteer hours in to help with the budgeting as well. So, Pedro, we can go to the next slide. This kind of continues on with what Steve was just mentioning about listing your sources of income. Even seasonal tax revenue can be a source of income, right? If you can estimate what you expect to get back as a nonprofit, that can be an additional source of income. And just as important is tracking your expenses, right? So it's important to emphasize the word track. Don't just make a list of your expenses, but learn how to record every expense in your budget as soon as possible so that you don't miss an item later. One of the notes that were on the slides earlier was to carry a little notepad with you and jot down little things that come up. That can be really important. It's always important to keep tracking. Tracking just doesn't mean estimating, but if you have an exact number, then that can help you with your budget as well.
And there's some really cool apps for your phone now that you can take pictures of receipts. It kind of files them, and it just helps keep you kind of in order as you're going out. Once you go out to spend the money that you raised, that's where it gets hard to make sure you're balancing all of it. So, use like the notebook, an app on your phone, the notes section on your phone is a really good way to kind of keep track of your day-to-day.
Yeah, agreed. So one of the most, I guess, exciting or important parts is to find out if you saved or overspent, right? So that's the part where you, excuse me, you're either really excited or you're a little bit down if you overspent too much, and then you're kind of tapping into next month or next year's budget because you overspent in this month or in this year. So that's really important. Evaluate your financial situation, right? So if your income, your expenses derives a positive number, then that means you have a savings, right? And that's what we always want to see. That way, the savings can add to your reserves, or it can go towards something that's unexpected that pops up. And then review your budget regularly. Your budget should be something that's fluid, that's constantly changing. When you create it at the beginning of the year or at the end of the prior year, it's something as a gauge as to how you expect the year to go. But things happen, things come up. There should be something that's fluid, that you're constantly changing, constantly keeping tabs on it to make sure that you're in line, close to being in line, or if you're going astray a little bit, as Steve mentioned, see if you can kind of cut back on some of the unnecessary spending items.
And that's something a lot of our organizations do on a monthly basis when they reconcile kind of their if they have a bank account, when they reconcile their bank account and everything they spent, when they've taken all the donations in or the grants, and they see if they're on track and if they need to change anything. Maybe you took in $10,000 more in revenue this year and you want to find a good way to use it. Maybe you took in less revenue and you have to say, all right, for the next couple of months, we have to either raise more to keep these expenses where they're at, or identify where we can subtract some expenses. But, at least quarterly, I would say sit down. It's a really good practice to put in place. And always having like that one person in the organization, the treasurer, the finance person, that kind of keeps an eye on it, because that really does help to make sure that the eyes are on the budget all the time.
So before we kind of wrap up our presentation, we wanted to go over some of the terminology and some of the lingo that, if they're a little bit unfamiliar with you, maybe we can address some of those questions as well. But accounts receivables and accounts payable. Accounts receivables are receipts or income that you are expecting within a certain amount of time. So typically a receivable is 30, 60, 90, 120 days. But excuse me, an account receivable is income that is not received at the time that your service has been rendered. An account payable is the opposite, right? So a bill or an expense that you have to pay out within a certain amount of time, 30, 60, 90, 120 days. So you have to understand the difference in the two. And the turnover, and I'm sorry, go ahead.
Oh no, when it comes to kind of the money you're waiting to get in, we all love when we get a city or a state or a government grant or even a contract to do something. The payments don't come in as quick as we would want. So that's a pain point that I know a lot of organizations have. You might get a grant with, let's say, the state to go and do something. The money's not going to come overnight, and you might have to go and actually do the job first before you get it. So, it's something to keep in mind as you're going out and getting grants, how long it's going to take for you to receive the funds, because government doesn't pay as quickly as we'd like sometimes.
Right. Balance sheet. So the balance sheet is a list of your assets, liabilities, equity, and retained earnings. So the balance sheet is a snapshot in time, whereas your profit and loss statement or your income statement is a fluid statement that's going to tell you the difference between your income and your expense. The statement of owner's equity or stockholders' equity is pretty much what can be reinvested back into the business. So the balance sheet is going to be, this is the equation for the balance sheet, is assets equal liabilities plus equity, right? So your assets, whatever you have that's a positive on the organization, should equal to what you have as a liability or an expense, something that's owed, and your equity, what you have that you can reinvest back into the organization. And then your cash flow statement shows the money coming in and out and how well the organization generates cash to pay its debt and fund its operating expenses. Let's see. Are there any other items that you guys may have heard of that you're unsure about before we jump into the questions that were submitted in the registration?
Yeah, anything on terminology, if you want to throw it into chat, we can kind of answer that piece of it. There's always, and I will tell you that your budget is going to be different based on, your organization. So there's something that's called a chart of accounts. And when you put together your balance sheet and your profit and loss, that's your chart of accounts. So every business has something different. Business A might have office supplies listed on there. Yours might be broken down by plants, fertilizers, donations. So it's all different based on your organization and can change. And, you can track everything in a budget, but it could drive you crazy too. There's some things that, like let's say office supplies. You could track your ink usage on your printer, your paper usage. All those can be broken down into different line items, but sometimes it's easier to just bundle it together into office supplies, so you're not going really crazy looking into all those pieces.
Okay, it doesn't look like anyone had any specific questions on terminology, at least not at this point. So we're going to jump into some of the questions that were pre-submitted at registration. Oleg? If we have an organization that's less than a year, how do we plan an operating budget? Some micro grants ask, what is our operational budget? And I'm confused sometimes.
I could take that one, Marcus.
Yeah,
You know,
go for it.
one, it's so we talk about this with businesses too, about having a business plan. And just like a for-profit business, your organization is going to have a business plan. And it's kind of, so you're going to have a budget and a business plan, and they run hand in hand. Think about the script for a movie and a movie. So your business plan is the movie, and your financials are the script. They make it happen. So what you want to do when you are asked, a great step for you to do would be put together kind of a plan and an operational budget. So, and make it an ask. You know, let's say your fundraising goal for this year is $15,000, and use that as your revenue. And then in your business plan, you're going to put what your methods you're going to go to get that $15,000. And then in your expenses, you're going to list your expenses so that those micro grant funders that you're going after, they're going to see that operational budget. Our goal is to raise $15,000 for this year. That $15,000 is going to be used for $400 is going to be advertising, $5,000 is going to be for supplies, $300 is going to be for an event. You break it down into all those pieces, so then they can say, wow, you know, this organization knows they want money and they know what they're going to go for. A lot of times, if you're asking for money, just like if a business is asking for a loan, the federal government doesn't let us just hand out the money. We need to have like a line item piece of where all the money's going. So it's the same thing when you go for grants. Ask for the dollars and then kind of give them a breakdown of where the dollars are going to be used. And you probably know exactly where you want to take that money and use it. It's just the practice of putting it on paper.
So the first question, how to tap into funding sources for CBOs, best practices for financial record keeping and reporting for audits, and how to find money resources, not referring to PFP, when your organization is not a 501c3. So as Steve mentioned earlier, there are a ton of software items that allow you to track and keep great records. And a lot of it is free as well. There's a ton of free software out there that you can utilize, and it's going to be different depending upon the need and the organization. And when you're looking for money sources, there are a lot of resources that are out there. The SBS, NYBDC, those types of organizations, those community organizations that CDFIs that are out there that can help businesses get access to capital if you don't feel like you're ready for a traditional banking setting just yet. If you're a startup or you know, you don't have all of the financial documents ready just yet, those organizations can even help you put together a package that can be submitted to a CDFI or even a micro lender or even a conventional bank if you're ready for that step as well. So there are a few different options and a few different organizations that are out there community-wise that can be helpful.
And I'll add to that. A lot of times, you know, gaining a 501c3 status is a really big help at gaining funding. You know, when you come to a lot of organizations can only give to 501c3s. So it is, you know, it's worth a couple of $100 that it costs to register your 501c3. You know, if you're doing under a certain amount of money a year, you don't have to file a tax return. You file this real simple form. And there are, as Marcus and I said, you know, there's free resources out there. QuickBooks is the best accounting software in the world. And with the amount of transactions you're doing, there's some really, really free or super cheap options for it. And I always say this too, you know, build your membership around the services you need. If you know you're going to need accounting services, get an accountant to be part of your organization, even if they're on your board, just so you have that piece of knowledge. Have an attorney as part of your group. It gives you that knowledge. When you have all those things, then that's their volunteerism. I'll tell you, we have an organization that, we're doing a volunteer event. We're going to be doing a volunteer event with to help their kids 18 to 24 kind of understand what goes into doing their taxes. Just like little things like that, when you build your board or your group, have those professionals be part of it because they'll give you free advice.
Linda Jones just posted something that can be helpful to some 501c3 organizations. Can go to Techsouporg for discounted software, including QuickBooks. That's really helpful. Thank you very much. Is TD Bank a good bank for nonprofits? Heard there's no minimum and zero fees. Is that true? We like to work with a lot of organizations. I have a soft spot in my heart for nonprofit organizations, so I'm going to say yes, we're a great bank for nonprofit organizations. But yeah, I would, well, Steve and I are a little bit biased, so I don't know if you want to ask us that question. One thing to tap into what Steve mentioned about the 501c3 status, and even if you don't have the status, there are umbrella organizations that you can work with, that you can use the 501c3 benefits under their 501c3 status. I'm working with an organization now that is fairly new. They only started in maybe 2021 or 2020, and it was taking some time for them to get their 501c3 status, but they wanted to ramp up their activity. So they partnered with the Rockefeller Foundation, excuse me, and they were able to use the Rockefeller Foundation 501c3 as their, excuse me, their umbrella company, and still get access to the same benefits as if they had their own 501c3. How to open doors and apply to revenue sources. Our accountants with TD and our nonprofit would like local branches to sponsor our events and green activities. There are several branches in the Midtown area. Getting connected with your local relationship or store manager is key. Once you go in and have a connection there, or even as a follow-up with Steve and myself, we can definitely put you in touch with the right people. We love partnering with community organizations and having that. You can go to the website and you can, apply for certain things, but if you don't have a contact, then it makes it a little bit more difficult. We like to bank human. So come in, speak to a representative, the branch manager, relationship manager, Steve or myself. And, if we're not the right people, then we can definitely put you in touch with the right people that can help in some way.
And I'll add something to that. As you're approaching organizations, every organization has different funding vehicles. So, for us, we have a community sponsorship lens, which is very tiny. Then we go into more of a foundation sponsorship. So there's going to always be different vehicles that organizations have to sponsor. Do your research on the organization before you approach them to fund something. Every organization is going to have different drivers or pillars of support that they like to give. And make sure that your ask kind of fits right into where their pillars are. And it's always something that you can look at beforehand and tailor, because it'll help you get funding quicker than going, and saying, I want to go, I want funding for this. Just make sure it kind of fits into their pillars. And if you can always do research on that if you go to an organization's website. But going local is good. And don't forget about the small businesses too. Small businesses have such a great piece of social responsibility to them. Your local barber, your local grocery store. Those are really great other funding sources too, besides big companies.
Next question, what records do we need to keep for donations? For example, IRS, we write less than 10 checks per month. Do we need accounting software, or is paper good enough? And how to handle reimbursements for supplies when using personal credit cards. I would say it's a matter of preference, but I would advise upon using some type of digital record keeping tool, just because if for no other reason, the way the world is going now, technology is going to be key, and it allows you to upload and update fairly easily rather than having a box with a bunch of receipts inside of it. And that may be easy for you in the moment, but when you need to get a lot of items together, it may be more beneficial to have it in a digital format. Personally, I use a digital scanner for my phone so I can scan receipts, just like Steve mentioned earlier, to keep track of items. And I think some software that's out there can help you guys do that as well.
And even, setting up, like, let's say a Google Drive, because you do want to have a paper trail for everything. So if you are using personal credit cards to pay for things, it's coming up with rules around that for your organization. So having a policy in place saying, you're going to use a personal credit card, you have to, fill out, send a copy of the receipt with the need for it, just so you have a really good track, even if it's a spreadsheet that's on a Google Drive that you can all go in and update and upload the copies of the receipts, just so you have that to turn over at any time, because you want to always be transparent with your finances in case anyone asks. So it'll kind of help too with the back and forth and having, the receipt box. We all have those images of movies with people going to do their taxes and taking out the shoebox full of receipts. This will kind of help streamline it a little bit for you.
Yeah. The QuickBook app is good for our treasurer.
I know a lot of organizations that do use the QuickBook app. It's based on your preference. There's a lot of different accounting softwares out there. QuickBooks seems to be the one that most people use. And I would talk with your accountant, because I always say this, if you're going to be filing a 990 every year, your accountant's going to want to kind of take some advice from them on what they, how they want you to do things, because it'll make their job easier at the end of the year. When their job is easier, the amount you get charged is less. So that's an important thing to keep in mind.
Yeah, and also when picking an accountant, make sure your accountant is somebody that's familiar with your space, with your type of organization. That is key as well. And making sure they understand the ins and outs of your specific organization. I think we went over most of the questions, if not all of them. Pedro, I don't know if there were any other questions that came in that I don't have at hand, or I don't know if anyone else in the group has any additional questions for us. For membership, any marketing suggestions? I think we kind of chatted about that a little bit earlier on, about possibly having a follow-up session to discuss marketing and advertising and things like that, and the different strategies that come along with that.
Yeah, and then for accounting, you'll all probably be on a cash basis. So a cash accounting basis, you recognize transactions when they happen. An accrual basis is when you're sending out bills and billing people. You most likely, I would say most of the nonprofits I see are on a cash basis accounting, and that's something your accountant might have a preference too. But I'm thinking that they'll most look at the cash basis.
The difference between a bookkeeper and an accountant.
So your bookkeeper is going to do kind of your day-to-day reconciliations. You might have someone in the organization that takes care of doing your monthly reconciliations. A lot of people don't do their own accounting. A lot of the nonprofits I know have someone internally that's kind of like their treasurer that handles putting things together, and then their bookkeeper kind of enters everything in. Bookkeepers are good when you have a high transactional business or high transactional organization. If you have a treasurer that really has a good understanding of just pluses and minuses for expenses and revenues, your accountant can probably work directly with them, and you don't need a bookkeeper piece. We find that a lot when it's a high transactional piece.
Can you enlarge on your funding from foundation or sponsorship of events? Is it all local branch or both local and corporate headquarters. So yes, every area kind of has its own budget with items. So the local branch is going to have a budget for dollars that they can spend towards events and donations and foundation and things like that. But there is a corporate bucket as well. So, but I think the first step would be having some communication with the local branch, and then if you want to involve Steve and myself as well, because Steve and myself work with all 5 boroughs. So we would be in touch with all of the local branches to add some assistance and help where needed. So if you want to have that conversation with the local branch manager, you can. You can also include Steve and myself. Our information is on the presentation. You can definitely keep us in the loop, and we can help where we can.
I will say too, funding is important. The best way to get in is through volunteerism first. So, asking for volunteer events, because in foundation, we don't look at, if you're a customer, if you're not. When we do sponsorships on the community sponsorship side, we do look at, what's our relationship with the organization? What have we done with them before? We look at it from a holistic approach of, do we do volunteer events with them? Do we have is there an employee that's on a board? So, think about that volunteer piece can be such a huge driver to get money in the end, because employee engagement is so important to organizations, and it's a really great way in the door.
Thank you, Marcus and Steve. I think we've had a lot of good questions. You guys covered some that were submitted before in the register, and some new ones that came out that were really good questions as well. So thank you guys for walking everybody through all this financial planning terminology and understanding. So for everyone else, stay tuned for survey that I will send out tomorrow to collect your feedback. Also, the recording of this meeting will be available for another 30 days on the website. Steve and Marcus have also sent their information for how to access resources there, and I will attach it to my email to send you guys as well, and a nice small handout as well to go with that. So stay tuned for that tomorrow with all that takeaways. And I think that Marcus and Steven talk about like maybe a follow-up, right? So there's definitely room for a follow-up.
And it's a lot, you can't take it all in at once. You do we talk from a little bit of a higher level, because each of your situations is going to be different. And as you get more granular on it, start looking at kind of what your goals are. The goals are the most important thing, because the goals are going to dictate how you build revenue, how you take on expenses. So, come up with those goals, and, always ask questions, because you're never going to be able to take all of it in at once.